Good morning, I'm James Lopez, President at HomeFi Corporation, and this is today's mortgage and real estate market update. Now, right off the bat, mortgage bonds made some modest gains during the overnight sessions, but those gains are pretty much gone, and we've started to eat into the gains from yesterday. Mortgage bonds at the time of recording are down about 37 basis points, and the 10-year yield is up about 10 basis points. Now, what this means for mortgage rates this morning is that they're going to most likely open worse. There's a lot of news that's coming out that could potentially move the market one way or the other, so we could be in reprice territory. And just a quick note, yesterday, mortgage bonds opened up yesterday with a pretty big rally. They were much higher, and by the end of the day, they still had gains for the day, but their gains were much less. And so we saw reprices for the worst throughout the afternoon, later afternoon yesterday. And that's because some of the investors overshot their expectations on what the bond market was going to do for the day yesterday. So they expected those gains to stick, and they didn't stick. And so we saw, even though we had positive numbers in the bond market for mortgage rates, we still saw some mortgage rate repricing for the worst because of that. Just an interesting note about what happened yesterday. Now, in other news today, initial jobless claims came out. These are people that are filing for unemployment for the first time. This is last week's data. Initial jobless claims last week rose to 185,000, and that's coming off of an all-time low since 1968. It's the lowest it's been since 1968, was the previous week. And so what this means is the story's the same. We've been talking about it now for a few weeks on jobs. Employers are firing less, and they're holding on to their employees more. So the job market is very tight, and there's a lot of employment, people that are staying employed right now, which is great news for real estate. People have their jobs. People don't have a job. They can't get a mortgage. They can't buy real estate. So the employment numbers are great for real estate. Retail sales for the month of March were released today. This information shows, the data shows that retail sales increased by 0.5% in the month of March. Expectations were 0.6%, so they were off just a little bit. I want to talk about something else that's really interesting coming out of Bank of America. 1/3 to 1/2 of people in the United States have an account with Bank of America. And they released some data that showed that since 2019, credit card usage has increased by 33%. Meaning that the unpaid debt that people are carrying is much higher right now. Now, we all know that home prices and home values have gone up as well. Now, on an unsecured credit card, interest rates on unsecured credit cards can be anywhere from 15 to 29%. It depends on your FICO, depends on your your income and things like that. So we're talking about high interest rate debt that you carry whenever you have unpaid balances on your credit card. Now, with home appreciation being up so much, this is a great way for individuals and homeowners to reduce the amount of cost for borrowing that money by taking a cash out refi and paying off their high interest credit card debt. Not only is it going to reduce the amount of overall money or cost for that debt, for carrying that debt, but you can also reduce your monthly payment. People can also reduce their monthly payments and increase their monthly cash flow by doing a cash out refi and paying off high interest credit card debt. Now, another different kind of angle as far as home appreciation goes. One thing that homeowners can do with the appreciation is they can take a cash out refi and then use that money to put down on an investment property or a second home. If you put it down on an investment property, that investment property can cash flow, and you can actually increase your cash flow monthly by pulling some cash out of your home and the form of equity and using it as a down payment for an investment property. It's a great way for homeowners that may not be investors in real estate to get into real estate investment. And to our real estate brokers and partners, it's a great way for you to reach out to past customers that might fit that type of scenario. Maybe they've mentioned to you that they are interested in investing or something like that. So it's a great way for you to reach out. Just give a touch point, first of all, to some of your past clients, check on them, see how they're doing. But then mention, hey, you can use your equity in your home to actually invest in real estate, increase your cash flow, and start to build more wealth through real estate. All right, so that's all that we've got for today. Want to say thank you for everybody that's watching. Please feel free to leave a comment if you have any questions, like and subscribe to our YouTube channel, And then head over to Facebook. The jobless claims data that we talked about a few seconds ago, we'll release an infographic over there on Facebook for that. And so go over there and check that out. Hope you have a wonderful Thursday, and we will see you tomorrow.